Jerome Powell just hinted at cutting rates, and that one sentence could save you hundreds of dollars a month on your mortgage or cost you thousands if you wait too long. Today we're breaking down exactly what Powell said, how it's already moving mortgage rates, and what it means for home sales and values in the months ahead. So what exactly changed? Well, Powell acknowledged that inflation pressures are still out there, but he also pointed to signs of a weakening labor market. That combination means the Fed may need to pivot and fast. In fact, he opened the door to possible rate cuts as early as September. Investors notice immediately. Markets are now pricing in about a 91% chance of a cut next month, which is a major shift from just a few weeks ago. Mortgage rates reacted right away. The average 30-year fixed mortgage rate dropped to around 6.52% to around 6.58%, hitting a fresh low for 2025. That said, it's important to remember the Fed doesn't set mortgage rates directly. Mortgage pricing is tied more closely to the 10-year Treasury yield and overall market expectations. Powell's comments pushed yields down, which pulled mortgage rates lower, but analysts warned we won't always see a one-to-one drop when the Fed cuts rates. So what does this mean for the housing market? Well, right now, home sales are pacing just under 4 million homes per year, well below the 5 million home mark that marks a balanced, healthy market. Affordability remains the biggest challenge. Inventory is rebounding, now back to really pre-pandemic levels, and that gives buyers more choices, but it also pressures sellers to get realistic on pricing. So what's the good news? Even modest rate relief could improve affordability, spark buyer activity, and boost builder confidence as well. But there's still the lock-in effect. Millions of homeowners with 3% mortgages are reluctant to sell and take on a new loan at 6.5%. That limits supply and keeps the market stuck in neutral. So where do we go from here? Well, in the short term, mortgage rates may hover kind of close to today's lows, around that 6.5% point, as long as Powell maintains this tone. Long term, everything depends on inflation and jobs. Inflation cools and the labor market weakens, we could see multiple cuts, but remember, bond markets ultimately decide mortgage pricing. That 10-year Treasury yield is what you'll want to pay close attention to. So for real estate, here's the big picture. At 6%, we'll see a noticeable increase in buyer demand. At 5.5%, get ready for a potential large price appreciation. That's what we saw last time, even as rates were climbing from 3% to 5.5%. That's because 140 million Americans are entering their peak home buying years over the next decade. Combine that with demographic wave with cheaper financing, and prices could accelerate quickly. So is this the turning point the housing market's been waiting for? We'll know soon enough. Stay tuned as we track Powell's next moves and what that may mean for buyers and sellers right here. Don't forget to like, subscribe, and click on the link below to schedule your free homebuyer consultation, because when it comes to real estate, who you hire matters.